Hello and welcome to the Credit Connection. I am here today with Matt Portere from Happy Money. He's the CEO there. We're live at the GAC. Welcome. Matt, welcome to you. Why don't you start us off with a little bit about yourself and Happy Money?
Yeah, well, Sarah, thanks for having me. So I'm Matt Portere. I'm the CEO of Happy Money, and Happy Money is a consumer finance business. We help customers consolidate their credit card debt to save time and money, and we do that in partnership with credit unions. So it's great to be here at GAC.
Credit union mecca for the week anyway.
For sure.
So, talk to us a little bit about consumer lending trends, and I'm sure it's like all up in the air with all the political things going on right now. So, how scary is that? But
there's a lot going on for sure. Well, I think the last time we talked, the Fed had just cut rates, and we were seeing a really steady march down with interest rates. We have seen rates back down a bit, but it doesn't look like it's quite such a steady run down that we once thought it would be. So there's a lot up in the air. Inflation's a little bit of a question, but we do think broadly interest rates have peaked, and I don't think we're going back to that anytime soon. But I think the fundamental story is the consumer's healthy. For the most part, we see strong credit quality trends across the industry, and there's lots of demands. And it's interesting now talking to credit unions here at GAC. There's really a lot of demand to get back into growth mode and to get access to assets and put them on their balance sheet. So it's been fun.
Cool. So, credit unions are very into auto lending, which is great. A lot of people need used cars, especially low to moderate income. But so my question is, how do we diversify, and why is that important?
Yeah, it's somewhat surprising when you see how much indirect auto concentration there is in the credit union space. I think the reason for that is it's an asset that's easy to get access to, but those margins are razor thin. And so we're hearing a big demand to try to diversify into other asset classes to get good risk-adjusted returns, and I think we're going to increasingly see that trend.
And I know you focus on consumer lending, but it seems like business lending might be one of those areas too where credit unions certainly have a lot of room to grow.
For sure. I was actually meeting with some credit union CEOs last night over dinner, and they were talking about really want to get at indirect auto, and one of the places they're thinking about doing a little bit more is on the commercial side, on the commercial real estate side. So yeah, I think we're going to see this in multiple asset classes for sure. Cool.
Yeah. So. Participations also is an opportunity. Can you talk a little bit about that?
Yeah, so for our credit union partners, we offer two options. One is direct originations, where the partner gets the member, and those loans sit directly on their balance sheet. And the other is participations, where there's an originating credit union and they participate out the loan. It's a great option for a credit union who might not otherwise be licensed or wants to partner or doesn't have the field of membership to be able to lend across the country and other markets. It's a way to get access to great assets with a good return.
Yeah.
So we're seeing a lot of demand for that, especially recently.
Yeah, and I think a lot of the government-related credit unions might have a little hesitation in lending right about now, just in case. So participations, though, can be scary for some, as indirect was when it's was relatively new, and sometimes still. How do you assuage that?
Yeah, I think the first thing is, we're very focused. I've spent my whole career in consumer finance. If you look at the rest of our team, very focused on good, sound risk management. I mean, we're originating assets and loans on behalf of our credit union partners. So it's really important that those loans are well underwritten, that they have good risk-adjusted returns, and that they'll perform well through cycles. And so one of the things that we hear a lot of, and the reason our credit union partners tend to give us really good feedback, is we're really thoughtful on the credit side, and we try to be really good partners. We talk a lot about what we're seeing from a trend perspective and the macro environment. We think that's really important. Whether you're directly originating an asset or whether you're participating, it's important that you have a strong partner that is giving you the right level of attention. And that's true for personal loans, and that's true for commercial. Doesn't really matter on the asset class. That's really important.
Yeah. So, we're live here. I know you want to get back to the event. So, as you know, I always give the guests final thoughts. What would you like to say to our audience today?
Well, it is a really exciting time to be here. Over the last couple of years, it's been a challenging environment for everyone, for our credit union partners, certainly for those that are partnering with them. But the atmosphere here is different than it's been over the last couple of years, and it's an exciting time. And so I think the market is getting back to responsible growth, and that's fun. I think it's good for consumers, it's good for the broader economy, and it's certainly good for credit unions. So
awesome. Thank you so much for your time,
Yeah.
Matt. Appreciate it.
Thanks for having me.
Thank
Thanks, Sarah.
you.